Hello everybody, and welcome to this new episode of the Empowerment Podcast. As you can see, the setup has changed. We're doing our best to improve on all fronts, to improve the quality that we can bring to you, both in the production quality and with the value that we bring with you to you guys. And so, next time we're gonna have guests. So stay tuned for that. In our pursuit to empower you guys, in the last episode, we talked about happiness, ways in which you can improve it. We also talked about crypto, blockchain, all sorts of innovations. And so these are some good episodes to watch to keep it on the theme with the crypto and the blockchain. In this episode, we're going to talk about investing. And so, we're going to talk about why we should invest, good strategies for investing, what we should do in this macroeconomic situation right now with the inflation that we have, with the supply chain issues, with the pandemic, and all of these quite uncertain times right now. And so I would say let's start with a basic. Garry, why do you think people should invest instead of keeping it in cash, for example?
Inflation. In layman's terms, right? $100 5 years ago is not the same $100 today, right? Because the price of the goods that you would purchase have gone up. So if you've got money just sitting in a savings account for 5 years and it's earning very minimal interest, like less than 1%, but the inflation rate, meaning the cost of the goods around the world, is going up, then you low-key lost money. So the reason a lot of people invest is to hit at least the rate of inflation, and hopefully, more, so that you're not losing money but making a little bit of money, to combat exactly that. And that's really why I invest. I made a nice amount of capital, with my career in athletics, but just having a bunch of money, again, sitting in a savings account is really like losing money. So if you can diversify that or put it into other things that can make money while, you actively do things or even passively don't do things, right? Then that's a positive, right? You don't have to continue to work yourself to the bone to take care of your family. So that's really my incentive, right? Is to prevent losing money due to inflation, and then to grow my wealth so that my family can be taken care of, for hopefully generations to come.
Yeah, and to your point, like last year, if you kept your money in dollars, let's say you had 100 grand in dollars, you'd have lost 7% or 6.8% of the money that you had. So if you had 100 grand, you would have had like about 94 right now. But if you would have invested in the S&P 500, which is an index fund that contains all of the biggest companies, it's a very diversified portfolio, anything from energy to growth stocks, to like car companies and so on. If you would have invested in that, you would have had a 30% gain on your money. And so, you would have had 130K instead of the 94K that you would have had in cash. And also, if you keep your money in a bank, that's not really a fair deal that you're having with it, because you're giving the bank this money that you're putting it in. They're taking your money and they're investing. They're giving out loans to people. They're buying bonds. They're doing all sorts of things with your money, and they're earning up to 10, 15%, 7% on the money that you're giving them. But they give you something like 0.1% back. And so, instead of doing that and letting them take your money and do this, you should just do what they do, right?
You
And
should
invest your
feed
money.
the bank. Yes.
Yeah. Like, look, we have this amazing tool. If you think about it, there are a lot of smart people on the planet, and there are a lot of successful enterprises. There are a lot of things that we need and we're going to keep needing as a society. And so if you could be able to provide capital to these people, so that they could go ahead and do the things that they're doing and get an interest back on doing that, and own a piece of what these enterprises are doing, and be part of the growth, then why not? Like, this is amazing. Like, this is unprecedented in human history. Up until last, I don't know, 100 and 200 years. You weren't able to do that.
Right.
And so this is a great tool for the average person, so to speak, to be able to be part of these incredibly humongous enterprises that are very profitable. And so yeah, that is another reason why we should invest. And so another one would be, if you think about it when it comes to like exponential growth, right? Because when you invest, it's exponential, it's not incremental. It doesn't go up in a line like this, it actually goes like this. And
Mm.
so if you invest something like $300 a month or $100 a month for 40 years, you can become a millionaire at just 7 or 10% interest return per year. And so why not do that rather than put it in a bank and save? It's a no-brainer. And for the people who think it's not safe, just look at history. Ever since the stock market existed, it has been giving an average return of 10% per year. Sometimes it goes up 30% like last year, and sometimes it goes down. And to the people's point, um there are sometimes, like if you would have invested in like just before the 2000 .com bubble, it would have taken you something like 13 years to just break even. So, there are some points when it's not best to invest, but if you would dollar cost average your monthly income into the market consistently for years, then technically speaking, you would be able to protect yourself from a risk like that. And so, yeah, if you would have invested all of your money in the 2000 bubble, in the 2000 .com bubble, then you would have lost those money for, let's say, 13 years. But if you would have kept investing even after the 2000 bubble crash, you'd have had some of the best returns ever, because the best time to invest is after the bubble bursts in these value companies, right? Like take Amazon and Uber and Google and all of these companies that were there. They 10x ever since the bubble. Some even did more. Oh, what are you showing me here?
Oh, keep talking. I'm just mirroring what you're talking about. If you would have invested after that 2000 bubble, you'll see here you had a tremendous amount of growth, right? And then
Yep.
same thing. So just here, I just brought up the S&P over the last 30 years so that people could whoever's watching can see what you're talking about as you're talking about it. Keep going.
Yeah. Yep. So if you invest in the market consistently, then you are exposed to a lot of growth. You're basically investing into the growth of humanity, right? The more humans we have, the more the better our technology is, the more advanced that we are, the more the economy grows, the more houses we build, the richer people get, the more products we have, the most products we sell, and so on. And so when you invest in the market, you're basically investing into the growth of humanity, and you're protecting yourself from things like inflation. I don't really know if you can look this up because you have the shared screen. How much money would you have if you would have kept it in cash for the last 10, like ever since the .com bubble? Because you would have much less than
So what
I
you
don't know
asking,
if
like
we can
what
look.
the inflation rate has been since
Yeah,
2000?
yeah, yeah. Let's look at what the inflation rate has been ever since the 2000. Okay, $1 in 2000 is equivalent in
Producing a
purchasing power.
cumulative price increase of 61.91%. Ooh.
Oh my god. So yeah, take that. Okay, so yeah, I think we have done our part on the part on the side of like why we should invest. Let's maybe talk about good strategies for investing. What people can do once they say, okay, I want to invest. What should I do now?
Pump your brakes first and foremost. Two things you need to do before you even do that. One, get your budget in line. Like, make sure you know what your expenses are monthly. What are you spending on groceries, your electric, your water, your mortgage, or your rent, right? All those things you need to, what's your income? What are your expenses? That will first give you a spot. If you have a tremendous gap between what you're making and what you're spending, right? So you have some disposable income, that becomes what you can now save, and in our case, invest first and foremost, right? So get your budget in line, figure out your income and your expenses so you can figure out exactly how much you can invest, even if it's $10 a month, right? You're just starting there. You got to know first. So I'd say you got to do that first. And then second, invest in your education. And it just doesn't mean like go buy a course or something, but like you invest time in your education too. There's plenty of free YouTube resources out there just talking about investing 101, or go listen to some podcasts. You feel me? Just invest in your education before you go invest your money into something that you don't understand, right? So take care of your budget, educate yourself, and then proceed with investing your money into a plethora of different vehicles that you could choose from. So I'd say that first.
Yeah, these
um,
are great points. Get your budget in order. Figure out which part of your income you can invest, and then start educating yourself. Read as many books on the topic as you can. Watch all sorts of content about it, resources like this podcast, and then be on the news. Study these companies. Use the information. Like, get the analytical tools that you need in order to figure out in order for you to be able to research these companies and ask yourself the question, is this a good buy? And so and also on the different investment strategies that are there. So depending on the amount of time that you want to put into this and the effort that you want to put into this, you can either invest in an index fund, and that honestly is it's a great strategy, right? You dollar cost average in an index fund. Dollar cost averaging means you invest a little bit each day or each week, and this way, instead of buying it at one price, you're actually spreading the investment that you have on a price range, right? So if it goes up and if it goes down, you're more protected the next time you buy. Is the best way in which you can invest, and the best way in which you can sell. So you dollar cost average into an index fund, something like the S&P 500, something like the Nasdaq, and so on. And that will keep you pretty well diversified. You'll learn a lot about diversification and why that's important. You should expose yourself to as many different industries and companies as you can, as you possibly can, right? Because you would have something like the Nasdaq going crazy right now, but you have the oil going up very much. Growth stocks are being killed right now. You have value stocks doing very well. You have energy cost going up, and you have energy companies doing up. So if you were exposed 100% to growth stocks and innovation, then you would be losing money right now. But if you would be diversified in different sectors, then you would lose a little bit of money here and you would gain the money there. And when the economy does good, everything goes up, so to speak. And so you're both protected when times are bad, and you're growing when times are good, regardless. And so yeah, that's one. The other thing I would like to talk about, no, so effort, that would be one. Invest in index funds. If you want to put a little bit more time in, then a thing that you can do is get even deeper into what investing is and start looking for particular companies that you think will do well. Whether it's biotech, whether it's crypto, whether it's anything in the innovation sector, whether it's things like the metaverse, VR, whether it's chips, right? You look into that. Whether it's renewable energy, something else that will do good. You go and you study these companies, you study the team, you look at their earnings, you look at what they think they will do. You study not just the company itself, but you learn about, okay, so renewable energy. What is renewable energy? What is blockchain? Why is it helpful? And so you study the product as well, and its utility, and the market to see whether it fits. And you do that, and you make decisions based on that, on which companies you think will grow the most in a year, and try your best to beat the S&P. And that is a higher risk, higher return strategy, that is more time and energy consuming. So yeah, that is what, let's say, investors are, and high net worth people are doing right now, in general. But I would say, if you want to expose yourself to the least amount of risk, and you want to spend the least amount of time, but you still want to get it involved, then I would say, index funds. They're the best thing that you can invest in.
I agree. I agree. Yeah, there's a difference between investing and trading, right? Investing, I would say, is like a part-time thing, which is good, right? To your point, how much time you want to put into it. Certainly looking at those index funds, you don't got to be super technical with it. Like, especially if this was money that was otherwise is going to be sitting in a savings account, like go ahead, find the S&P, NASDAQ, whatever it is, throw it in there and don't worry about it, right? Like, and I say don't worry about it, meaning this, like, once you start worrying about trading, trying to time the market, you got to keep this in mind, right? It's not about timing the market, it's about time in the market, right? So if you're just going to pick an S&P, throw your money that was in your savings account in there, let it ride, let it do its thing. You'll see it go up, go down, go up, go down. You don't got to look at it, right? Don't even look at it daily, because then you might start doing something. And that's I'm going to say 90% of people that should be investing in the stock market, like the average person, that's how they should do it, is what I should say. To Sammy's point, right? If you want to commit a little bit more time, right, you want to start getting into the analytics of it, and reading the Bollinger Bands and the 200 moving average and some of that stuff, you could do that you get into more like full time, right? Because you want to really get into it, so you can do maybe day trades or swing trades, or whatever other types of trades you want to do. But the step between the two would be kind of this, right? Maybe you want to get out of the indexes, but you don't want to get like super crazy into looking at people's price indexes and all this. Just in terms of picking companies, most people not even know what a chip is, where a chip is at. Yeah, we all got chips and everything we're using, like Nvidia, AMD, these things, but you could also do brands that you use. You know what I'm saying? Like, look around you and the things that you use on a day-to-day basis, or like say you rocking Nike a lot, throw a couple dollars in Nike. Like, it's a successful company, it's a brand that's been around for a while. You have an Apple computer, an iPhone, there you go.
Invest in what you understand.
Invest in things that you use. You know what I'm saying? Like, you don't have to get into the fringes of things. Like, and then there's the step beyond that and beyond the next one, which is like crypto and the more risky things, and you really gotta understand some things you will get taken advantage of, right? So I'm saying again, 90% of people that listening to this are probably should. If you got money sitting in a savings account, as Sammy said, we losing money. So let's put it into an index fund. Let it sit there for a while. You were just going to let it sit there anyway. So this is not money you should be using for rent, right? This isn't stuff where like, oh man, if it goes up, or if it goes from $100 to to $70, dang, I'm not going to be able to make my rent payment. No, this is not that money. Hence the first step of taking care of our budget, right? Remember, our disposable income is where our investment money comes from, not our required non-negotiable expenses that we need to take care of, our food, shelter, water, things like that, right? So I'm gonna reiterate that. Make sure this is money that, if it was gone, it's definitely unfortunate because you work hard for your money and it's in a savings account, but this isn't going to affect your livelihood. You know what I'm saying? So anyway, 90%, these index funds, great. If you want to get a little bit more into it, rock, the brands you wear, the products you use, maybe identify those companies, get into those. To Sammy's point, you may end up beating the S&P, right? Because these individual stocks may perform better. And they may also perform worse, right? And if you want to get a little bit more deep, a little deeper into it, right? Invest in your education a little bit more. Again, start to get into the analytics of reading these charts, understanding like these algorithmic traders, and kind of how some of these bigger firms trade, and you maybe start to monitor what they're investing in, or maybe you pick an investor or a politician and see what they're investing in, and maybe even track some of the stuff that they're doing and follow suit. And again, I'd say the fourth high risk, all the other, the crypto, everything else. So there's different levels to it, and you can proceed and through them as you wish. But I do believe 90% of people, if you got savings account money, man, just grab it, put it into the S&P or something like that, and just let it ride. And I'm gonna leave it with this. Again, it's not about timing the market. It's about time in the market. Warren Buffett said this: the stock market is a way to take money from the impatient and give it to the patient. So make sure you're a patient one.
Yeah. And to your point, you're most probably not gonna lose it. Not financial advice, but invest what you can afford to lose. And yeah, one thing that is important, you're gonna start seeing it in the moment you, like, in the first couple of months when you start educating yourself, is that you're gonna start growing cocky a little bit, and you're gonna think you can predict this and predict that, and you know this and you know that now. And so what I would say to you is, those old common that old common wisdom that is being predicated on people left and right. Timing the market beats timing the market. Dollar cost averaging is the best thing. Diversify. What else do we have as good old wisdom? Invest. Buy when
Buy
people.
low, sell high.
Yeah, well, buy when people are
Fearful.
fearful, and sell when people are greedy.
The
Do
RSI.
these things.
Yeah.
Yeah, because you're going to start investing a little bit, and you're going to start learning a little bit, and you're going to be like, I don't need to diversify. I think this stock is really good. Or you see that people are very greedy right now, and you think it's going to keep riding up, and you want to sell at the top because you think you're going to predict where the top is. And or you want to sell something very bad that people are doing, is selling when the index is low. Okay, when certain stocks are low, that starts to get complicated because it's a case by case basis. But when the index is low, don't sell because you think, oh, I'm gonna sell now and I'm gonna buy when it's lower and then it's gonna go up. Don't try to time it. You're more or less never going to be able to time the market, like in the Wolf of Wall Street saying not Jimmy Buffett or Warren Buffett can time where it goes, like if it goes in circles up or down in circles. It's a good one. um you're never going to know, no matter who you are, no matter how much you know, you're never going to be able to time the market. It's not completely rational, so that's something else to have in mind. Even though it seems rationally as if it should go up, that doesn't mean to say that it will go up or down. So just
Mhm.
stick to the old common wisdom. I would say that is the wisest, smartest thing you can do. And people are going to tell you that when you're going to start investing. You're going to talk to, good tip, talk to people who invest, talk to people who know a lot about this, and learn while doing that. That we can have this for another episode with choosing your friends and so on. Try to find friends and surround yourself with people who have who invest and who do good things. So you would learn from them and try to increase the value that you can bring as a person. So you can teach the people around you as well. And so it will be a little back and forth, but that's a little tangent here. You're gonna have people telling you that you should stick to these old wise things, and you're not gonna believe it up until you get burnt once, and then you're gonna be one of the preachers that do that to the new people. And so yeah, it's a it's a cycle that just never ends. And I would say learn from other people's mistakes and don't do that. um about investing in companies that you understand and companies that you buy, that you use. I think that is good. Sometimes it is not necessarily, because especially in the environment that we have now, some of these companies have incredibly high multiples. So what a multiple is is it's much more complicated than this, but when you evaluate the worth of a company, you basically take how much it made in a year and you multiply it with 10 or 20, like however much the combined value of each share from its stock, that's the value of the company. And then you take that and you divide it by how much it's made in the last year, and that's its multiple. And generally it's good to have a 10 or 20 multiple. That's a good value. If it's less than that, then it's undervalued. If it's more than that, then it's overvalued. Of course, it's much more complicated than that because you also have projected growth, and you also have the brand and so on. And those are a little bit more complicated to evaluate and put a price tag on. But yeah, try to see if it also has a good value. Try to see if it fits into the future, so to speak. My big thing, I'm very bullish on, because of the technological advancements that we have right now. um I forgot what the chart is called, but it's the evolution chart of technological advances, and
Mhm.
it also grows exponentially. It took us more time to evolve from bronze swords to metal swords than it took us to get from metal swords to atomic bombs. And so the way in which it goes, it's very slow for us to evolve and to get from new technological revolution to another one, to another one, to another one. But each time it gets a little bit shorter until we get to a point where we're gonna have one every other year, you know. And so that is basically what we're seeing right now with VR, with biotech, with revolutionizing the financial system, and so on. Like we're building rockets, we're 3D printing organs on a space station that is orbiting around the earth, you know. Like how crazy is that? We're trying to send people to Mars, and all in the same time, you know. These are going to be some very, very profitable industries, and they're just in the beginning. What I like to invest in, and that's my preference, and I think it's many people's preference, is investing in companies that are part of industries that will grow. And so when the industry grows, the company inevitably grows. And so of course it's speculation, but I'm speculating on the fact that we're gonna need more and more rockets, and the cheaper rockets, like flights, the cheaper is gonna be per pound to take it into orbit, the more businesses we're gonna have around it. And so you have people like Steve Wozniak right now, who is becoming the first garbage man of the space, because we have a lot of metal and dead satellites and so on orbiting around the space, and at some point it's going to get really cloggy and hard for you to even get to orbit without being in danger, because those things are flying at something like 21,000 kilometers per hour, the 3 times the speed of a bullet. um and so if these things start colliding and breaking apart, it is going to make it almost, if not impossible, for us to get to space. And it's a problem that we need to start working on solving right now. And that's what Steve Wozniak is doing right now, which is cleaning up space. We also have people digging up meteors and all sorts of rocks that are flowing up around space, and they're taking the water, the ice from those rocks, and they're separating the hydrogen from the oxygen and taking the hydrogen as a fuel, you know. So that's another cool thing that you could invest in. Then you would have all sorts of things like CRISPR, people modifying our DNA in order to fight diseases, in order to maybe reverse aging. there's this, I've just been
Yeah, I
reading on
lost a lot of
this.
money in CRISPR this past year.
Yeah, and I forgot what it's called. I don't know, Nakamoto something.
Tashi Nakamoto.
No, yeah, I don't know. It's I'm bad with names, but I'll tell you what it is. So they figured out something they do with the, and I'll tell you why I'm bad with names, because it's Richard Feynman. That's why I'm bad with names. I'll tell this little story after. So what they're doing basically is they figured out a way to they figure out some chemicals that would react with a cell in such a way that it turns it back into a stem cell, and they make cells behave in a more youthful way, thus stimulating organ health and increasing your ability to fight diseases and basically age. Well, decreases the amount of aging that you have per time, and hundreds of millions of dollars have been invested in this in the last year. Even Google is getting involved. A lot of big names, a lot of big VCs in town are in town, not in this town, but not in Urania, are investing in these companies, and we're gonna hear a lot about it in the next couple of years. So if you can get involved in that, that's another great thing that you can do. Then you have things like decentralized finance, and crypto, right? Like you have so many unbanked citizens of the world who do not have access, for the love of it, to loans, to basic financial and banking practices that we can just have. They don't have access to that. And so crypto is an amazing revolutionary way in which these people can finally be participants and beneficiaries of these banking systems. Bank not you get what I mean. And so that's another great thing, where we have things like Starlink, right? So these are floating satellites around the earth that are going to provide internet to basically everyone, and that is going to connect about 1 billion or 2 billion people to the internet. What is that going to do to Bitcoin, to all of these countries that have unstable currencies, more unstable than Bitcoin, that will get on top of it when they have internet? What are you going to do when you have DeFi, where people can basically become banks and lend money, or people can get loans, put collateral and get loans through smart contracts without needing an intermediary? Where can I invest in that? Well, you can. These things are gonna grow, and you can become part of this growth by buying a piece of it. And so it's an amazing thing that humanity has developed to allow you to be able to invest in these things. And then you also have something like the internet, right, that allows you to get informed in real time about both how you can invest and also what is going on in the world, and what you can do. Money is floating in and out of places time and time again. Every day, trillions of dollars are being moved around. If you can do something to figure out where you can put your money first before those trillions of dollars, pardon me, before those trillions of dollars go in, then you find a way to grow. So yeah.
I love it. I love it. No, you're spot on. Spot on. I wanna rewind a little bit. So sounds like fintech, right? So the financial technology type stuff, blockchain, artificial intelligence, robotics, ash, what is it? Space. I'll just say space stuff.
Based,
Whether it's
that's a
whether it's rockets or the commercialization of access to space, or the garbage collecting up there, the mining of water and hydrogen and fuel and or even mining of precious metals from meteors, right? All that stuff is the gold rush, no doubt. Innovation, technology, yes, it is. But when I look at history and I look at what happened with the gold rush, not only did the miners that went out there and mined the gold make tons of money, but the people who provided the tools, right, the picks and the shovels and the sifters, right, the people who facilitated the gold rush also made a lot of money. So to me, what would be the picks and the shovels of this technological revolution that we're seeing here, right? The answer, in my opinion, are chips. Are these semiconductors in these chips? You can't do any of that stuff without that. And there's not a lot of companies that are producing them at the rate and or the quality that they're needed, right? So again, no investment advice, but don't forget the facilitators of the movement and the revolution also do very well. So yeah.
Yeah. Rockets as well, because they're gonna be the ones bringing up
Space
all of
stuff.
these things up in space. And then what else is gonna be things like Binance, Coinbase? These guys got like became billionaires off of selling crypto to people. Basically selling the pickaxe for the gold mine.
Yep.
Um, so yeah, get exposed to that if you want to. Of course, not financial advice, but there are things that I'm doing, you're doing, that have been fairly profitable, and that will most probably, speculating here, keep being profitable because of the demand for them. And so yeah, what
So
else do we
stock
have?
stock market, investing in business, and pretty much what that means to me is like not everybody is made to be a CEO, and like that's okay. So you don't need to be the one out there. That's another way you can diversify your money is investing in yourself with your own company. And not everybody necessarily is built to do that. So the stock market is a way for you to do that, but with those who run companies, right? There, these people are paid millions, tens of millions, hundreds of millions of dollars to run these companies. They do a pretty good job at it, right? So identify those companies and make money with those companies, right? That's essentially what the stock market is, what we're talking about, right? But
Yep.
another way, again, to diversify, aside from starting your own company, right, investing in yourself, investing in other businesses, we've got real estate. And real estate is one of those investment vehicles that isn't really going anywhere. At times, sometimes you kind of hear one of these age old things in the real estate world that they're not building new land, right? So like in terms of supply and demand, the supply is not going up with land, so it's constantly going to continue to get more valuable. But we are building land. We're out there building islands and stuff and building some stuff in
And
the
going
Middle
up to
East.
Mars.
We are building something, but in reality, that's true. And we can't go vertical and we can't go underground, right? So there are still areas to do real estate, but generally speaking, right, we all need a roof over our heads, and most of the work that we do, there are roofs over it. Any businesses, things that you do. I know we're moving into this crypto world, but where do you think those miners are held at, right? They're inside of some real estate somewhere, and like everything is real estate. McDonald's is real estate, like Starbucks is real estate. Those are actually the bigger plays of some of these companies that we're talking about, right? Like McDonald's, some of their most profitable parts of their company, their business, is the real estate that they've acquired. They own the
That's
land.
how they got rich.
Exactly. So
They get a
real
very
estate,
low. Okay,
no,
you can. Oh, I was saying McDonald's gets a very low commission off of the franchises that they're selling. But the way in which McDonald's makes money is they buy the plot of land and the piece of real estate where the restaurant, the franchise is gonna be made, and they force the franchisees to rent from them. And so that's how McDonald's actually makes money. They don't make money from selling the fries. That's how the franchisees make money.
right.
So
And
yeah.
by the company forcing these franchisees to rent this land from them, that increases the value of that land
Yes.
like tremendously. In which case, kind of like a bank, if they wanted to, yeah, they might do it. You could pull money out of the value of that land and grab some more, right?
Mm-hmm.
So there's yes, real estate, and there's different ways to get involved in real estate, right? As a real estate investor, it's tough if you're not an accredited investor, right? You don't have over 1 million in net worth or making 200,000 or whatever the case is. You may not have access to certain syndications, right? But there are now, especially with what's going on with crypto and with some of these crowdfunding things that are coming up, you can join a fund as an unaccredited investor, just the average person, join your money with other individuals, and now you can all invest together. There are funds that facilitate this investment, acquisition, development of these projects. And now you as a just one person can say, yeah, I own part of that 200 unit, residential complex. So there's opportunities like that to also invest in real estate. Or you hear about Airbnbs and rentals and multi-units. We're not going to go super into depth with it right now, but there are a lot of different, just like in the stock market, like with depending on what your level of involvement, what kind of time you want to put into it, there are different things you can do within real estate too. So, and there's different returns, different risk. As a developer, we take on the most risk, right? We're like options day traders or something. Like we put a lot of money and time and effort into something, and it's not guaranteed, beyond the fact that real estate is always needed. So if you can stick with it, do your underwriting, meaning real estate's making money. All right, if I put this much in, this is how much I'm gonna get back. I can service my debt, meaning if I take in a loan or if I take in money from somebody and I tell them I'm gonna give them this amount of money at this time, that based off of how much money I'm making in my real estate, that I can cover that, then that makes sense to people. Real estate is a very stable thing for people to put money into, and it nowadays is starting to get more into the philanthropic impact investing type world, where it's beyond just the infrastructure of real estate, but now it's combining with the community revitalization of real estate, right? Which increases and rises the tide for all ships. So real estate is powerful. It's not going anywhere anytime soon, and technology is being included in it. Fintech is part of it. Those chips I was talking about, is all the stuff that we just spoke about is involved in real estate. Even literally in the stock market, there's real estate investment trust, right? Like REITs. So you can literally own a piece of real estate by investing in the stock market. So
Yeah, real estate is one of the best, the safest things that you can invest in. And yeah, the supply is limited and fixed. Let's say in cities, and those are just gonna more or less keep going up and up throughout time. Of course, we have things like the 2008 crash where it goes down, but that's a good time to buy, I would say. um
yep, like
what I would
right now.
you can invest in real estate at different price ranges. You can like right now with the innovation of crypto, you can actually buy a piece of a house through an NFT,
Mm-hmm.
and then you can get a piece of the rent based on how big of the percentage of the house is. So you're joining up with a lot of people. You're turning the house in an NFT, and through the smart contracts, you're able to get a piece of the revenue and of the value that the house has, because the NFT is pegged one to one to the house,
So to my
or the
understanding,
commercial
like
real estate.
kind of how that works is like it's just another way to facilitate group economics. And like
Yeah,
with like the NFT, all that is saying is like whoever owns this NFT or these NFTs, to my understanding, within the smart contract, it says if you own this NFT, you own a percentage of said LLC, a physical LLC, and that actual asset, that real estate, is owned by that LLC. So within the operating agreement of that LLC, you as an owner, it says, all right, if you own this NFT, you get this percentage of this LLC. And when there's rents that come from that asset into the LLC, it gets dispersed to you, right? So it's the same thing that's been going on. It's just another way of facilitating it in
a
reality.
much more simpler and trustless way to do it. Because before, you would need to start an LLC, make all sorts of contracts, meet in physical person, trust the person that has the LLC that is not going to run away with the money, and so on. Now, you get all of that. You get all that out of the way. You have everything in smart contracts, so no one can interfere. You can check the terms and be sure that those terms will be completed, because you have these robots, basically these programs, making sure that each and every single thing is like making sure that you are not basically able to screw anyone over. And so, yeah, that is a much simpler way because you can simply invest in the NFT. You don't need to sign any contracts. You don't need to meet the person. You don't need to trust the person. All you need to trust is the blockchain and the smart contract. And so, it's a better way to do it. It's a revolutionary way to do it. And yeah, another way in which you can do it is, if you can afford it, of course, that's for a higher net worth thing. You can buy a duplex and rent out one part, live in the other, and have the person who lives there, who pays the rent, you would have them pay a part of the loan that you made, so that it pays itself back. That's a smart thing you can do. Another, like, let's just spill out random tips. And instead of buying a 100K car, you can buy a 100K real estate property, rent it out, and then lease the car, and then have the money you get from rent to pay for the lease. So this way you have one money making property and the car, and you keep the 100K. You can sell the property, and sell the lease basically, and you would still have the 100K, and you had your car basically, and you can use it. Other things that you can do is you can buy real estate properties. Of course, educate yourself on location and all of the criteria that you would have for buying a house, and try to design them. Try to sorry, not design, to repair them, fix them as much as you can, bringing sweat equity, right? And then use the money, the value that you bring to the house. Oh, sorry, when you buy a house at a lower price because it has all sorts of problems, and you go there and you fix the problems, the value of that house increases.
Mhm.
And so the amount of the percentage to which that value of the house increases, that is your sweat equity, and basically your profit. So you can either ask the bank to give you, let's say you bought it at 100K, you made it be a 130K this time. You can either ask the bank to give you 30K. You can either stop paying 30K from that, so you'd pay 70K instead of 100, or you can sell it, pay back the loan, and take the profit, and then buy another one, and do it again at a little bit of a higher price and higher profit each time,
Mhm.
to in order to expand. So or you can take that 30, you can take a 30 loan, a 30K loan, that you can then use for other things. Leveraging, it's um great way to make money in real estate. Banks love to give out money to people in order to buy real estate. Banks consider it as very safe. The cheapest loans that you can get are for houses, and so you can do a lot with that. And of course, your exposure to risk is lower, because most probably, if you take a loan out for a house, the way in which you're gonna default, you're just gonna sell the house and not lose a lot of money, unless the real estate market crashes. Case in which, don't sell your house and don't default on your loan. That would be pretty
Yeah.
bad.
Now the strategy you're talking about is called the Burr strategy. So that's buy, right, some not a dilapidated property, but a property you can add some value to. So you buy, you rehab, you get a renter inside of it, and then you refinance it, right? So you pull some of that equity out, and then you can do it again. You can go find another property to either put a down payment on or buy it outright. Again, do some rehab, rent it out, refinance, buy, rehab, rent, refinance. Burr.
Burr. I like that. I'm not an expert in real estate, by the way.
No,
Gary's
you hit it.
the Gary's the expert here on this thing. He has a revolutionary real estate company. Yeah, like the way you said it now. real estate is not just about real estate, it's about community involvement, it's about sustainability, it's about innovation, and you're bringing all of that with the bridge, right? So you have a piece of real estate, and everything that is does, it's sustainable in every way in which it can possibly be. And so it's great for the planet. It's great for everything. And then you also use, it's also cheaper, right? Because then you have lower cost on your water, lower cost on your energy after you, like, because you have solar panels and so on. um and then you're also involving the community by doing all of the amazing things that you're doing with like financial education that you're going to bring. And so and what else are you doing with, like, you have financial education, you bring food to people, like you're gonna have vertical agriculture, right? You're gonna have places where people can learn to develop their, like, sports and so on. You're gonna have all sorts of programs for children in order to grow as people. And you're gonna do a lot of things for groups and communities that need it, right? And it's basically where it's another market that it's going to grow substantially in this decade, and you're at the forefront of it. And so that is amazing, and I'll give you some props for that. Yeah, the best thing that you can invest in is yourself. Elon Musk doesn't invest in stocks, he invests in his own company. So, like, if I'm not saying you should follow the Elon Musk religion per se, because I was saying it as if you should do everything he does. It doesn't matter. Like, just, it's a good strategy to invest in yourself. um it's the best thing that you can invest in. And again, I'm like Gary was saying, that doesn't mean buy expensive courses. It means simply trying to do whatever you can to increase the value that you can bring. And so the more you do that, the more, how can you increase the value that you can bring? You educate yourself, not just on how to invest, but whatever your job is, how can I be better at my job? you
Mhm.
know if you learn how you can be better at your job, that is going to have an impact on your income. Assuming you're in a company that rewards that. If not, then increase the value that you can bring, and then move to a company that rewards that, because you're gonna have the power to, right? The better you are, the more companies are gonna basically beg you to go and be working with them.
Yeah.
And so try to increase the value you can bring as as a worker. Whether you have a company, what are you working in a job, whatever that job is. You have, you would say, a cook, like a chef, right? As a chef, you can have a you can work on a minimum wage, or you can be like Gordon Ramsay, who has, I don't know how many hundreds of millions of dollars, right? So if you're good at what you're doing, whatever that is, I'm not saying a chef is a bad job. I love cooking. It's an amazing job. But I'm saying, the better you are at whatever it is, you don't have to build rockets to make a lot of money. Things can be either very simple or very complex. You can flip burgers, or you can make, and I'm not saying there's anything wrong with that, or you can make extremely complex dishes, and you can cook them for presidents, right? So the better you are, the more value you can bring, the the more money you make.
Yeah.
And so other examples, like even bartenders can make 500K a year, in certain places, if they're good enough. And again, not saying there's anything wrong with being a bartender. I'm just talking about jobs that you wouldn't think make a lot of money, can make a lot of money if you're good at it. And so that's something very, very important to keep in mind. um so yeah, that is the first thing that you should invest in, is how can you improve yourself. And that is going to give you the income, and then take that income and invest it, part of it back into yourself and part of it into the market. So,
Yeah. I man, have some gems dropped. Hope y'all were
yep,
taking notes because financial literacy 101.
yep. So, I would say that concludes this episode of the Empowerment Podcast. Is there anything you would like to say, or should we?
I'd say if you don't take anything from this episode, take this. Get your budget together. You know what I'm saying? I don't mean like living on a budget. I mean knowing what you spend money on. You know, how much money you getting in weekly, bi-weekly, monthly on a check from your job or your hustle, whatever it is you're doing. Know how much that is and know how much your expenses are. Like, just write it down. Like, all right, here's a Comcast bill, or here's a internet bill, or here's, whatever it is. Like, just do it just track it for a month, write it down, so have that budget first and foremost, and then that will facilitate, you know, whatever else you want to do. And
If you don't
we're
track it, you cannot control it.
no, exactly. You can't track it, you can't control it, you can't measure it. You don't know if you're successful, or you certainly know when you're a failure, when your money's gone. So,
Yep.
what do they say? A fool and his money soon depart. And I
Yep.
believe that if you're not preparing, if you fail to prepare, then you're preparing to fail. All those things. You feel me? So it first starts with your budget. Know what your income is, what are your expenses, and you can stop there because you're gonna be way ahead of the game. Because at some point you're gonna be like, all right, well, I've got money that I can save up, and it's okay to put into a savings account at first. You gain it up. Maybe you got $200 in a savings account or 200,000 in a savings account. And you're like, all right, I want to take $50 or 50,000, and I want to put that into one of those index funds that Sammy and Gary were talking about. Right, sit it in there for a year, 2 years, 3 years, 4 years, 40 years. Add to it periodically, right? That price average, everything, it'd be good. It'd be good. But take care of that budget. Everybody can do that. You don't need to be a rocket scientist. It's something you need to do, and it's something they don't necessarily teach us all in school. So it's fairly simple, but it needs to be done, tracking it so you can measure your success and make sure you've got an opportunity to even engage in opportunities.
That's a good one. I'm just realizing now that at the end of each episode, I ask you to, like, if you have any closing remarks, and then you drop this like wisdom, quotable, like wisdom bomb, right? Like we should have it as a tradition. At the end of each episode, I'll just ask you, and you summarize everything perfectly into like one key thing that people should take out of the podcast. So that's amazing. That concludes the end of this episode. So yeah, stay tuned, guys. We're doing the best we can to increase the quality that we bring and increase the value that we have, that we provide for you guys. And so yeah, see you next time.
Stay safe,
Bye
stay
bye.
dangerous, and by all means, let's build.
Let's build.